All right, so we had our first taste of success with this momentum strategy. If you remember, there's kind of like we cast a broader net, right? So there's like three things we're chasing right now. That we started out with that kind of mega cap, large cap, commodities, major ETFs, just looking for momentum there and trying to day trade it. Then we spread our wings a little bit. We went into some swing trading, trying to catch more moves, and we moved into a mid cap, small cap type theme or sector rotation type. Like we're looking for something that's running for a reason, right? So it's AI right now. AI is hot, so that's the kind of stock we'd be looking for. And then I just kind of threw in this low float gapper strategy as a third kind of just spreading the net wider, trying to find something that would work. And it surprised me actually. Let me show you my screen here. So you can see here that we've actually realized $4,000 profit, and we started out with $10,000 account. It was just a small paper trading account. So it was $10,000 and we've realized over $4,000. That's a 40% gain in your account in 1 month. That is a substantial gain. That's the kind of momentum strategy that I was looking for. The only downside to this is that in developing this strategy, I was really hoping to show you the process in depth. And for this low float gap, like I spent the first like 2, 3 years of my trading journey in low float gappers. That's what I was targeting. And as such, I mean, I have a lot of experience. This is probably a lot of discretion, like on which trades to take, right? So let's bring up the spreadsheet. So these are the trades that I took. This one, obviously, we're still in this trade. It hasn't stopped out yet. Oh, it might go. It might still work. We got stopped out on a couple, and then our profits all came from four trades. So that's the actual forward test. The list that I'm tracking every day of gappers, we've got 71. So there is a bit of discretion here in deciding when the market conditions are supportive, what stocks are we looking for, what looks right to me. Um, I'll just show you quickly what I'm looking for here. This is an example of a trade that I actually paper traded here. So what I am looking for is on this first day, looking first of all for the SPY to be in an uptrend. It's strong. It's not having a pullback or mean reversion or straight up bearish. It's actually in an uptrend and things are strong. The next thing I'm looking for is for these small cap, these low floaters to actually be doing multi-day runs and squeezing shorts for like a second or third day in a row, not just one green day and then they all die, because that is a phase that these things go in. So the specific, if we just dial it right into that day, specific chart that I'm looking for is that it stayed strong. It didn't just, capsize intraday. And then even in after hours, it's kind of like holding this base here. So that's something that would have told me to set an order. And when I set the orders, I'm setting a stop entry order. So in this case, I set I set it for high of day right here, if you can see that. And then it would have chopped around. And this, of course, guys, is why I am feeling more and more strongly that don't sit there all day and watch these things. Because if I sat there, I just would have probably stopped out on this trade for a loss. But I just left it. I didn't even watch it. I didn't even remember this trade, to be honest. I set up the trade according to my rules that I'm validating, and I took profits right here, 240. Where's the little arrow? It's right in here. So I took profits at 240. Um, it went further. I don't really care. That's no big deal. So when I went back and looked at these trades, what I was looking for is can I take a couple of exits? Can I take like half my profits at a 2-to-1 ratio and then let the rest run? Let's go back to the spreadsheet. Uh, I mean, there's not many trades to analyze here, but I had nothing else to do today and I felt like doing it. So I kind of looked these trades over. And from the trades that I did well on, there really wasn't a lot more to gain. And what you'd be looking for is not that one of these, I got four winners. I wouldn't be looking for one winner to have more that I could have captured. I'd be looking for all four to have more that I could have captured. And that wasn't the case. In fact, one of these I almost top ticked, and that's actually a little too close for comfort. I don't want to capture all the move on something like this. I just want to capture a safe, 2-to-1 risk reward or whatever it is, um, and then I want to be out of this trade because they're low floaters, right? They move like crazy. So um, take your profits into strength and move on. Now I've got 71 trade occurrences here. So what a nice thing to do would be to go back through all of these trade occurrences and see like was there something that I could have looked at more seriously? I recorded sector again, is a hot sector going to play in to these low floaters, or are they just completely disconnected from that kind of thing? So that's something else that I might look at. What I would say what primarily stands out from what I did look at so far is that the overall market is strong and in an uptrend. However, from my years of watching these low floaters, I can tell you that some days, if the broader market is taking a break and it's not going up, then a lot of people will come to these low floaters and they'll trade them when the market is not hot. So there's more to dial in. This is why I say we use these spreadsheets to develop our discretionary edge, to develop our minds, develop ourselves as traders. And of course, you're not going to win every single time. You can't know everything that's going to happen. So that's the success that we had. As far as the other strategies, the large cap strategy and the mid cap strategy. Like I have the mid and small cap momentum one. This is the one that we're really focusing on sectors and themes. I just barely started placing some trades, and we've got some winners and some losers here. I can go to the chart. Yeah, so this trade isn't doing great, but I mean, I wouldn't get choked up about that. It hasn't stopped me out. It could break out again. With this particular setup, I'm definitely going to sell half at a 2-to-1 risk to reward, and I'm going to let the rest run. And the reason for this is it is a different type of trade than the low floaters. The low floaters are often just some PR release trying to get the stock price up to keep their listing on NASDAQ or trying to sell an offering into it. There's nothing really behind it. With this particular mid and small cap sector type trade, we're focusing on that there is a fundamental driver, which was the original idea, if you remember, when we started talking about it with the large caps, major ETFs. There had to be a reason for it. And I kind of do want to stick to that. I'm going to keep working with this because whereas the low floaters can provide almost like I dare I say cash flow. It's not really cash flow, but maybe it might be cash flow in the month. You might call it that, right? Might be able to generate some sort of consistent return on the month. With this trade, the idea is that you let it run. And I'm noticing on some of the trades that I've been uh, tracking, forward testing, like some of these names have gone substantially higher. Like we're not talking anymore about like a 2-to-1 risk to reward. We're talking about like the price has doubled since I started, since I would have entered my from my entry price. So now we're not talking about, like I said, a 2-to-1 risk, or we're talking about doubling the entire capital that you put in. And from what I understand, the research that I've done on this, um, yeah, apparently 5x on your capital, sometimes in a really hot market, say 2020, 10x on your capital. And that's the kind of thing that we want to see. You know what? That sort of thing's not going to come along every day. But if we get good at trading this, then we'll get there. One other minor thing that I introduced is I'm mostly trading breakouts based on the FinViz screener that I showed you last time, which is over 70 RSI, higher than usual volume. Of course, we're limiting the size of the company. But I also looked at 50 SMA breakouts. Honestly, instead of looking for something that's 70 RSI, we're looking for something that's breaking over the 50 SMA on the daily chart. Not finding a lot of good trades there, but the 52-week breakout, I did find one or two trades on the 52-week breakout screener that I did not find on the over 70 RSI screener. So I'm going to start tracking them too, because if we can find stuff that's in a hot sector, it can run. If it's breaking out 52-week highs, it can still run much higher. So that's kind of where we're at right now. It's a little exciting to have a little taste of success, but I'll leave you with this. When you're new, you'll see this. I made 40% on my account in 1 month, and you'll think, okay, I've done it. I'm consistently profitable. Let's remortgage the house. Let's take out a HELOC, whatever we got to do, and let's go nuts on this strategy. I can make 40% every month. You can't. You know, there's going to be months where I might do more with this strategy. There's going to be some months where we break even, and there's probably going to be some months where we have a drawdown, right? Now, the strategy clearly has a lot of potential, but we just need to temper our expectations. That's why we continue this process of tracking these trades, reviewing them, forward testing them for many months, 6 months, a year. To be honest, even if this goes well for 4 or 5 or 6 months, um, I might fund a small real money account and start trading this. That would be typical. But I'll keep doing this spreadsheet work for at least a couple of years, and to be honest, I might not ever stop doing that spreadsheet work, because at some point in the future, that trade might stop working. And when that happens, I need something to fall back on. And that is the process of tracking all your trades, reviewing them, iterating, figuring out what broke, what went wrong, or is there something that you can do to just stay out of the market when it's not supporting this particular strategy. All right, guys, leave me a like, a comment, subscribe if you want more of this content, and I'll see you on the next one.